And gentlemen, good day and welcome to Smiths Limited Q2 FY24 post-results conference call hosted by Smiths Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone telephone. Please note that this conference is being recorded. I now hand the conference over to Mr. Amit Hiranandani from Smiths Limited. Thank you and over to you, sir.
Thank you. Good morning, everyone. On behalf of Smiths Limited, I welcome you all to Q2 FY24 conference call of Steel Strips Wheels Limited. We are pleased to host the senior management of the company. Today we have with us Mr. Mohan Joshi, Executive Director, Mr. Naveen Sorat, CFO, and Mr. Pranav Jain, DGM Finance. We will start the call with initial commentary from the management, and then we will open the floor for Q&A. Now, I hand over the call to the management team. Over to you, sir.
Thank you, Amit. Good morning, everyone. Hope everyone is doing well. On behalf of Steel Strips Wheels Limited, I extend a warm welcome to everyone joining us today to discuss our financial results for quarter and half year ended 30th September 2023. I hope everyone had an opportunity to go through the financial results and investor presentation, which we have uploaded on the stock exchange and on our company website. I will begin with the capex project, and then we'll move to our financial and operational performance for Q2 and H1 FY24. Post that, we will open the floor for Q&A. To start with, our total capex spend for H1 FY24 is rupees 190 crores. We expect for the full year FY24 capex spend to be around 320 crores on an alloy wheel brownfield capacity expansion project, which we have preponed the capex for Q3 FY24, for which total capex required is approximate 190 crore, and till date 130 crore is spent on this project. This project will increase the alloy wheel capacity by 1.8 million wheel rims per annum. It is expected to get completed by start of Q4. On such account, we have made a fresh net borrowing of rupees 160 crores. On steel wheel business, on 12th of October 2023, we have received NCLT order for acquisition of A&W Auto Components Limited for the consideration amount of 138 crores, which will be paid within 90 days of receipt of the order, and the resolution plan needs to be implemented. We have set out action plan for timely and smooth implementation of the resolution plan, and for this acquisition, we expect total capex of roughly 158 crores, inclusive of maintenance spend, and we expect A&W plant in Bhuj to become commercially operational by Q1 FY25. Then coming to the half-yearly performance of FY24, revenue from operation for the period increased by 3.9% year-on-year to 2178 crores from 2097 crores in H1 of FY24. EBITDA saw a 4.8% growth at rupees 238 crores against rupees 227 crores in H1 FY23. Profit before tax stood at around 150 crores, and profit after tax stood at around rupees 100 crores, with profit after tax margin for the first half of FY23 stood at 4.6%. Revenue mix for first half of FY24 has been 28% from the alloy wheel and balance 72% from the steel wheel business. For alloy wheel rim, sale volume has increased by 6% year-on-year to 14.8 lakh wheel rims. For steel wheel rim, sales volume has increased by 8% year-on-year to 82.7 lakh wheel rims. On quarterly performance, in Q2 FY24, revenue from operations for quarter increased by 4.9% year-on-year to 1134 crores from 1081 crores. EBITDA saw a 6.2% growth at 124 crores against rupees 117 crores reported in crore and profit after tax at 52 crore. Profit after tax margin for Q2 FY24 stood at 4.6%. Revenue mix for the quarter has been 28% for the alloy wheel and 72% is for the steel wheel. Well, alloy wheel rim sale volume has increased by 1% on year to 7.7 lakh wheel rims. For steel wheel, sale volume has increased by 9% year on year to 43.6 lakh wheel rims. Coming to export front, Q2 FY24 has lost 109% growth in export revenue year on year. Export sales has been supported by an improving demand scenario. Export volume increased to 3.28 times in Q2 FY24 year on year and 2.88 times in H1 FY24 year on year. With this, now we open the floor for question and answers. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Mr. Abhishek from Dolat Capital. Please go ahead.
Thanks for the opportunity and congrats for a strong set of numbers. Sir, you are adding one more product, studying aluminium knuckles. So how much capex is required in that segment and how much revenue expectation for FY24 and FY25?
The total capex for the first million will be close to 200 odd crores. And that is on the exterior side. I think it will be between 180 to 200 crores. Which can generate close to 220 to 240 to 50 crores kind of a top line. And margin profile, I think we have already discussed previously.
So how much?
Two parts. This will be broken into two parts. Some of that will be coming in this financial year because the mass production is expected by June or July 2024, and which will be half of the capacity, and half of the capacity will come into the next financial year.
And how much capex you have already done in this project?
In H1, we already did around 15.5 crore of capex, and we expect total capex in FY24 will be around 50 crore on the same on knuckles.
Okay. So as you mentioned that the total capex would be around 3.2 billion. So what would be the capex for the alloy wheels, knuckles, and the AMW components? So in AMW components, this is a 1.38 billion. Knuckles would be around 100 crores.
In FY24, AMW is over and above what we supposed to be 320 crore. Right? In 320 crore, around 190 crore is on the alloy wheel side, 50 crore is on the knuckle part, and balance is on the other projects.
So that means the most of the capex would be incurred in FY24 only, and the FY25-26 capex would be at a very low side.
FY25
so
capex will be on the lower side.
Okay. And sir, what would be the effective tax rate in FY24 and FY25? In first half, the tax rate is a very higher side at around 31-32%.
FY24 will remain on the old tax rate. The tax rate will remain at 33 odd percent. So this will be the last year for us to be on this old regime. From next year onwards, it will be 25% will be there.
Okay, sir. And in this quarter, basically, we have seen a very strong growth in the export market. So already export has touched around 330 crores. So what would be the guidance for full year FY24?
I will remain on course with what we had guided for at the start, that we are targeting a number of holding around 600 crores for export.
Okay, sir. Thanks, sir. That's all from my side.
Thank you very much. Just an information to the management. Sir, your volume is really low. It sounds like you're speaking from a little distance. Please come a little.
Is this fine?
Sir, a little more, so that the investors can.
Is this fine?
This is much better.
Okay.
Okay, great.
Then the speaker is a problem. We'll try to rectify it for the balance course of the.
Sure, sir, not a problem. Thank you so much, and I'm sorry for the inconvenience, ladies and gentlemen. So the next question is from the line of Sanchit Narang from Narang Family Office. Please go ahead.
Hello, sir. I am audible.
Yeah.
Yeah. Thank you for the opportunity. Sir, sir, as I was looking through your trade receivables, they have increased quite a lot in respective to the sales increase. So why is that?
Yeah, the majority is on the account of exports because we have higher receivable days in exports.
Okay. Thank you. And sir, on a follow-up on that only, the U.S. exports as like 69%. Majority of it is to the U.S. So we are seeing a lot of uncertainty in U.S. So we look to diversify it in the future.
See, as of now, the volume breakup which is coming in terms of the feature and the anticipation that out of say odd 4,500 crores, we are targeting 600 crores. We don't see too much of uncertainty coming in from the perspective of the current customers. What we feel that the existing customers will ramp up their China supplies, ramp down their China supplies, and will ramp up their India listing. So from a perspective of customer concentricity, we don't see any problems. And we are fairly confident that given the kind of geopolitical as well as the current economic environment that we are visualizing, no risk of any region-specific issue is expected. What I only expect is that within the U.S., we expect larger amount of participation coming in next financial year from the alloy wheel side, which is going to give decent amount of growth on the export side.
Okay, that's helpful. And sir, any asset turnover guidance for after the capex is complete? All this capex.
It will be hovering between 3 to 4 times.
Thanks a lot, sir. That's all from my side.
On the receivable side, so if you look at in terms of number of days, they have just been partially upward from 24 odd days to 32 odd days. And that is primarily because of the fact that last month, that is September, was the best ever month in terms of sales. And exports have really shot up.
Okay. And to maintain this cash conversion cycle that is currently there, we don't expect it to go upwards.
So what will happen if you look at the cash flow for the H2, the entire cash flow from operations will flow directly to the bottom line instead of getting consumed in the working capital. I guess whatever consumption, whatever increase that was meant to happen in the working capital has already happened.
Okay. Thanks a lot, sir.
Thank you. The next question is from the line of Ankush Sarvaria, who's an individual investor. Please go ahead.
Good morning to you all. I have 2 or 3 questions from you. The first question is, sir, we have seen an exponential increase in volumes of exports along with the revenue, but that is not reflecting in the margins of our numbers. So if in case the exports have gone up exponentially, the margins should have increased. Am I correct?
So just to figure it out that, I think in the last financial quarter also, we updated that the current environment of the business is fairly very competitive, and we don't want to lose the market share to US and Europe to any of the competitors, which is the South Asian countries, and the margin profile is intact with a little bit of benefit going to the customer in terms of some benefit for volume-led discounts, which is to the tune of 2 to 3 crores for the quarter, and I feel this is a very small cost for maintaining a very high rate of growth for sustaining the fixed cost factor for the factories. But within the feature, the factor which remains is that overall business mix is still at 11.25% kind of an overall margin mix. And we feel that this is very important to maintain this mix going forward, given the competitive intensity of the business within the scope of the wheels business.
Okay. My next question is, sir, on the front of acquisition of AMW, do we expect any tax relief in the next financial year due to this acquisition?
So, see, on a standalone basis, AMW Auto Components will see some tax relief based on there will be losses which will be carried forward. But on a standalone SSW, there will not be any tax relief pertaining to AMW.
Yeah. On the consolidated basis, what is the expected amount in absolute terms?
So that we are quantifying. I guess that number will be known once the financials of AMW Auto Component get drafted till the time we get handover. Based on that, we will be able to quantify what is the carry forward losses which is carrying, and that will be something which will be allowed to be set off. So probably in Q4, we will be able to give you an exact number on the kind of benefit that we'll get from that.
Okay. And my last question is, sir, on the front of our relationships with Maruti. As I understand, your filing was that you have discontinued the small margin business with Maruti, and you were expecting that Maruti will also take supply from us in terms of alloy wheels. That was about 2 to 3 quarters back. So is there any progress in that, or are we still there?
So, see, on the relationship part, it is not as if that we have changed the relationship per se. It is a conscious call that we have taken based on the margin and the business which was on the table that we declined that particular order. But other than that, whatever order which is there in the pipeline are there with us. On the alloy wheel side, the discussions are going forward well, and we believe that very soon we'll be out with something on that.
Okay. Thanks a lot for that's it from my side, sir.
Thank you so much. The next question is from the line of Vignesh SPK from KCMA Wealth. Please go ahead.
Hi, sir. Thanks for the opportunity. Am I audible, sir?
Yeah.
So just want to understand your view on the CV cycle, like how is it going, and next year we might see any downturn and how it will impact our volumes?
See, on the CV side, we have take the numbers based on H1 progress. So there is a jump of almost 20% in terms of volume, which is already witnessed. If you look at in terms of Q2 versus Q2, there is a jump of almost 29% in volume in the CV segment. And we believe that this probably growth will continue for the rest of the year. With the election stated next year, I guess there will be an additional impetus that we'll see coming in from the government on the interest side. So we believe that this cycle will sustain.
Okay, sir. Thank you. And the next question is on the EV side. Are we catering to any EV players and any opportunity size?
See, on the EV side right now, the discussions with the Israeli company is on hold because of the obvious reasons known to everybody. And we hope that the country is safe and the management is also safe. And we are in discussions with them on a daily basis. I think this quarter should not have any development given the kind of circumstances that we have from that country. And we are awaiting the clearances of all the obstacles on the geopolitics on Israel. And then probably we'll be able to update you in the next quarter.
Thank you, sir. Just on the domestic side, any opportunity you're looking at, sir, on the EV side? Domestic players?
On the EV wheel side, we are anyway supplying close to 50% of the market, which is the wheels business, which is a hub wheel motor that we are trying to supply. We feel that the capacity expansion of small bit is being done at both the factories in Chennai as well as in Dappar, wherein some amount of money has been spent. And we feel this will take up the EV wheels business to the market share of close to 70-75% by Q3 end. And on the controller side, I think, as I said, the Israeli thing is fairly very fluid right now, and it'll not look nice to talk business right now with the country, and we are letting the situations resolve its bit. And please wait for one more quarter to settle the things out on these relief front.
Sure, sir. I understand. Thank you. That's it from my side.
Thank you so much. The next question is from the line of Omkar Arora from KCT Family Office. Please go ahead.
Good morning, sir. My question is on the lines of employee benefit expense, which seems to have gone up significantly from 66 to 90 crores if you compare to the same quarter last year. So if you can know the reason for the same.
So, see, there are a couple of factors to it. I guess we witnessed the similar situation in last quarter as well. So therein a couple of factors were highlighted. One is...
Sir, I'm really sorry to interrupt. This is the operator here. Sir, can you please come a little closer to the mic? Because I've got an update stating that your volume is very low and people cannot hear you.
Okay. So now it is audible?
This is much better. Please go ahead.
So on the employee expense side, I guess as we narrated last time as well in one call, there are a couple of factors which is getting this to increase. One, there is an increase in the volume. So if you look at even H1 versus H1, so there is almost 7 lakh units which have got added in terms of being sold. Second, there is additional recruitment that we have done on the R&D side, and we are working on that part to probably help us out in subsequent business entries. Third is on the team that we have built up on the Mehsana, wherein we are already expanding our capacity. Since we have preponed most of our capex pertaining to Mehsana, that team deployment has already been there, who have been going extensive training so that they can be deployed immediately once the plant is up and ready. So that expense is also there. And then there is an impact of increment as well as minimum wages. All these have been bunched together there, which has increased and resulted in the spike.
Sure, sir. Thank you.
Thank you so much. The next question is from the line of Radha from B&K Securities. Please go ahead.
Hi, sir. Thank you for the opportunity. So I wanted to understand on this aluminium knuckles product. So this was an import substitute. This is an import substitute product for us. But is there any producer in India currently supplying these products to the OE?
So this, as you rightly said, it's an import substitute, and currently nobody is producing it. And as you know that this business has the potential of repeating its growth story like you have seen in alloy. So currently the penetration is less than 1%, and we feel that with the EV culture coming in and premiumization of the vehicles, the conversion of cast iron knuckle to aluminum knuckle will follow very, very soon, and we feel that domestic production capacity will give enough reasons for localizing it. And we feel that as an opportunity over next 5 years, this opens up an opportunity of 2,000 to 2,500 crores worth of an industry exposure, given that what is this sense that we have in the Western world. And we are just trying to get in this technology and trying to work out on this. And hopefully over next financial year, the financial performance of this business will also be highlighted.
Okay, and so currently then all the OEs are using, if my understanding is correct, all the OEs are using steel knuckles, and we are putting up capacity for aluminum knuckles.
Yes.
Okay, sir. And so what would be, as you mentioned, the margins would be very high. So would it be for this business? Or I could not get the total.
On the margin side, we said that the margin profile will be similar looking, as we are estimating right now, will be similar looking like alloy wheels. So please give us some more time, because actual productionization will take another 6 months or so. I think in Q1 or Q2 of next financial year, the real picture will come into it, whether it is a little less or little more.
The total capex we are doing for this, you mentioned 200 crores.
Yeah.
And what was the revenue potential you mentioned, sir? I could not get that.
As I said, it's going to be between 220 to 250 crores.
Okay, understood. Thanks.
But that debottlenecking will be tried once the capacity is up and running.
Okay, thanks.
Thank you so much. The next question is from the line of Rohil Gandhi from PPFAS. Please go ahead.
Yeah, hi. Thank you. Am I audible?
Yes, please.
Yeah. Actually, my first question is relating to your alloy wheel capacities that you've set up over time. I just want to understand. So when I look at I believe the current capacities of almost up to 4.8 million, you'll be setting up for almost a total capex of around 800 to 1,000 crores. I just want to understand how, your capex, when I compare it to some of your other competitors, has been a lot more efficient. So can you just shed some light as to how you were able to manage that?
I think efficiency, I don't know how to compare it. We are spending the money at
Rohila. तुमच्याद्वारे कॉल केला गेलेला नंबर त्यावेळेस नेटवर्क कव्हरेज एरिया म्हणजे संपर्क क्षेत्राच्या बाहेर आहे. कृपया थोड्या वेळाने प्रयत्न करा. The number you are calling is out of network coverage area. Please try later. आपके द्वारा डायल किया गया नंबर नेटवर्क कवरेज क्षेत्र से बाहर है. कृपया कुछ समय पश्चात प्रयास करें.